Hello, everyone. Welcome, welcome. All right, we are getting started a couple minutes early here because there's a lot of chatter going on in the. Oh, hold on, I got an echo. All right, sorry about that. We are getting started a couple minutes early because there's a bunch of chatter going on in the chat, which is where it belongs, I guess. No, there has not been an overnight options trade yet, but we may get that live from Nathan when he comes on. I'm not sure. The new VIP tool is out. I noticed it in the members area there. However, it's not 100%. Well, it is, but just remember we're only trading gold 2 days of the week, and today's not one of them. So you've got your SPY, your SPX, your QQQ, your IWM if you got in on the VIP version of overnight options. So that has dropped. You can grab your own overnight options trades using the overnight options assistant. Yes, just like Ted said. All right, let's see what else. Sailing Breeze, welcome to your first session. Appreciate you being here with us. Our closing playbooks are a bit different from our opening playbook. So we do 2 shows a day. We do opening playbook at 10 a.m. and we do closing playbook at 3:30 p.m., both Eastern times. And those are somewhat different sessions. We have a little bit of a more of an educational session typically in the morning. It's a little slower. We have a little more time in the afternoon. Now we are a little time before the market closes, so we tend to move a little faster. And sometimes, for newer people, it's a little hard to keep up with the trades. So if that is you, then don't worry about it. Just kind of watch along and don't get stressed out about taking the trades that we're putting out in the session. They are going to be a little bit more speculative, maybe in some cases a little more aggressive than the trades that we put out in our premium services. So just trade with caution in the closing playbook if you're not an experienced trader, and we'll go from there. And I know that we have both Nathan and Graham joining us, and we're going to have a special guest here today. Oh, hi, guys.
Hello.
Hey.
Want to tell them who the special guest is going to be?
It's you, Dave.
Yeah,
Welcome.
it's me. I'm here. It's not me. You don't want it to be me.
No, we're gonna have
all we'll cover is pastries. That's the only thing we'll cover if I'm the special guest.
Yeah, we have Alex jumping on here. I don't know if you guys know this. Graham and I have been spending a little more time with Alex behind the scenes, kind of seeing what he's been up to. Graham, I think you might have even posted something a little, maybe that was earlier this week or whatever, about one of those things. So we've got a couple things that we've kind of got our eye on with him. But today, I was going to talk to you about something that Graham and I never talk about, which is kind of how to understand theta in a more practical, actionable way. I probably never said the word theta on opening or closing playbook, but it is a real part of options, and there's a really nice visual chart that Alex is going to walk through. That I kind of had a little bit of an aha moment, just kind of getting a quick preview of his slides. I thought, oh, this is really cool. So looking forward to that. Before we jump into that, someone might have mentioned already in the chat the overnight option assistant. Yes, that is live, and big news, the VIP version is live as well. So if you guys want to take some of those bonus trades with overnight options, that is now available to you as well. Obviously, been excited about that upgrade for a while. The last chance to get in on that upgrade is tonight at midnight, which I'm sure I'll post a couple times on Telegram and things like that. But just as a final heads up there, that is now live. Just go in your members area. And now you'll have to do something a little bit different if you're VIP, because you'll actually have to type in VIP or overnight options VIP, because that is in the separate area there for you. So just wanted to make note of that. Also wanted to make note, I think Graham and I both said, hey, listen, this government shutdown, it's nonsense, nothing burger. This market's bent on going higher, probably will go higher. And here we are, maybe a little faster even than I was projecting. We hit all-time highs today in the market. Pretty unbelievable. And so I'm going to stick to my guns here, guys, and say that I'm just obnoxiously bullish until we prove otherwise. But
Did you
yeah.
Did you see my chart in Telegram?
No, I did not see your chart.
You mean you didn't spend all day refreshing my Telegram?
I've seen a lot of your charts though, for the last 2 weeks, and I didn't even tell you this, but I actually stole your slide deck yesterday. During closing playbook, I just literally stole your roundtable slides and just went through them as if they were my own, to set up my $100,000 Bitcoin trade. Thought, I could make my own, but you already did all the hard work. Let me just steal your slides. And so, yes, I have been paying attention to what you've been posting, so much so that I'm stealing it in real time.
He did give you credit, to be fair.
That's nice. That's very nice, Nate. Well, I actually have to give credit to Victoria, one of our research assistants on the team. She's actually the one that found this chart. So kudos to Victoria. But we were talking about it this morning, and I know it approved it. I just had to claim that I've seen the headlines before. I've seen the freakouts about government shutdowns. Every time I've seen it and followed along, nothing ends up happening. Markets don't even care. Well, Victoria found this cool chart to show that to you. Look at this. It's a very, the average day is 54% of the time it's higher that day of the government shutdown. Do you guys know what the average up day in the S&P is? Like how often it's up versus down on a normal day, any given day, any day of the week?
Like mid 60s, right?
No, it's like 53%.
Oh, is it really?
Yeah. So it's right. It's just a very, very normal day for the S&P. Look at this, 12 months higher. I think that stat's kind of far out, but the markets really don't care. It's just what I'm trying to show you here. Very normal trading period. Some good days, some red days, but nothing crazy out of the blue, typically speaking. The average length, funny enough, is 8 days. So we'll see if we go over average here or not. Regardless, again, pretty much a nothing burger in the stock market. The news loves to make a big fuss of it. I'm sure CNBC does as well, because the more you click on their articles, the more money they make. So they're just trying to get you to click, which is working out. It worked out for me too for a while. But now I'm kind of just rolling my eyes anytime I hear about a shutdown, to be honest.
Yeah, well, all I can say based on that chart is let's get Ronald Reagan back in office and have him start shutting down the government, because those are some those are some pretty sick returns. All right, well, let's get Alex to jump on here, because it always goes quick. We're already 5 minutes in. Hey, Alex, thanks for jumping on.
Hello. How are you doing?
I don't want to give away too much, but I already kind of said you're going to talk about theta, which is something I said I don't think I've ever said the word theta on opening and closing playbook. So it'll be some new information, I think, for folks. But I think you did it in a way that's super actionable and practical, where people can kind of get it and have an aha moment with that. So looking forward to that. I thought the charts that you showed were like very clear and actually, made you not want to go to sleep like you're in math class. So excited to go through those. How do you want to kick off? I know you mentioned you had a trade. Oh, go ahead. Graham's gonna.
Before we get there, I'm gonna. This is why, Nate. This is why I called you today and said we need to get Alex on. This was the main reason, and then we're gonna cover another great reason. But check this out right here. If you guys aren't in Alex's Telegram, I wonder if I can make this bigger.
Nope, yeah, let's look at that.
Yeah, Alex, please show all my gains.
I saw this. So we heard some chatter from some folks that you've got some sort of scanner thing going on. And within like an hour, sometimes even less, you're seeing triple digit returns. So this was this morning. Guys, this is his free Telegram. This is Alex's free Telegram, 10:02 a.m. Look at this. Does it get any easier than this, guys? He posted, buy to open, KSS, 3 October 25, 16 calls at 19 cents. Basic level 1 options trade. Popped up on a scanner, which we'll hear more about this over the coming days. Look at this, guys, within 27 minutes. So 10:02 a.m. was posted. 27 minutes later, up 47%.
Yeah.
If you pull up the chart of KSS, you can see it moved right away. I'm going to keep on going back here.
That is 1 minute longer than Nate's overnight options trade close.
Yeah,
at the
take
end of
that,
the day
Nate.
yesterday. So
you got me.
I don't know if that's it. I don't know if that's
I'm
any
going to find
good.
another one here. You had SMR post at 9:59 a.m. and later that day, an hour later? Not even an hour later, 20-something minutes later, up 10%. And I think you end up doing even better, 20% there.
30%,
30%
actually.
Again, I just want to reiterate, Alex, do people pay money to be in this channel?
No. And so these are, I built a scanner, and every day it gives me many opportunities, something I call like free ride trades. And I just send them out on my free Telegram channel. I give you everything I'm seeing, the exact strike price, the exact options contract. And so far, I mean, we've been on a tear just in the last, so I'm looking at the track record here since 9/25, right? So like a week, the last week, we've gotten 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 winners over the last week. So that comes out to more than one trade a day. And they have all but there's been 22%, 20%, 30%. We've had, I mean, the latest one, like Graham said today, was on KSS. Took about 20 minutes. Before that, we had one on the marijuana stock, MJ stock, Tilray yesterday or 2 days ago. And I send these all out for free. So if you are interested in seeing these free ride trades, definitely feel free to sign up for my Telegram.
I posted it in the chat. I forgot my.
Here, I'll post it for you.
Alex, funny enough, I actually I do my research. I don't want to. I want to make sure that everything we bring on here is good, true, and it's going to help people. So I did my research. I actually researched behind the scenes, got the team to send me your trade tracker just to verify for myself. Look at this, guys. Again, I just can't believe you're doing this for free right now on Telegram. What is this? Let me do a count form. 11 winners in a row for free in Telegram. Some of these are pretty big. CoreWeave.
Yeah, that was a huge one.
500%. In people took this trade. You took this trade. Obviously,
yeah. These are all real money trades too. Also,
I kind of like how you're doing it. 83% winning directionally trading doesn't make a lot of sense to me. I said this morning, if you win 55, 60% of the time with directional options, you're a pretty darn good trader. I don't know how you're doing 83%. We'll have to dig more into this later. And I don't want to steal all your time here. I know you're going to cover some training on Theta. But this is impressive, Alex. You're doing it for free. There's no downside to joining his Telegram. So just click that link in the chat. Guys, you're going to want to check these out. We've got people posting in the chat right now, too, saying they're making money, having fun. So we got 600 people here in the room. I expect all 611 of you to be in a Telegram in the next couple of minutes. And that is
by the way, Alex, I actually like some of those that are like smaller winners. I think it's kind of nice where it's like you get those big kind of, like free ride trades or whatever you call them, where it's kind of like, listen, if it starts ripping, great. And if not, we'll just take a little bit of the profit. Because I think that's what I've seen a lot of people do wrong. They'll just like have a handful of those 500% winners and then a whole bunch of 100% losers. So I really like that you're basically saying, listen, if it's rolling, great, we'll take the profit. If not, we'll get some of those smaller winners. I think that's probably the only directional kind of aggressive trade like that's going to win 80+% of the time. So I like it. I will say that as the publisher, I'm not going to allow you to do it for free forever. But for now, it's for free in the Telegram channel. So make sure you click the button and jump in there.
That's on Nate, folks. That's not on me.
Yeah, you can blame me.
Nate
can blame me.
Always.
Overnight option trade alert has not been sent out yet. You guys can use the dashboard if you want and grab right from the dashboard.
It just hit.
We should have it out in a minute or so here. Did you say it did go out?
Yeah, he just put it out. Yep.
Okay. So in the next minute or two, you should see that in the dashboard. All right. Well, we definitely used too much of your time there, Alex, but most of it was bragging on you. So I guess you'll have to forgive us. Although someone in the chat asked, hey, is this Nate or Alex's scanner? So I guess I'll just take credit. Yeah, it's mine. All those trades are from me.
Yeah, is it too late? Yeah, I'll take credit too while we're at it.
Yeah. My one suggestion is, can we change your Telegram channel to be called Theta Thugs?
Theta Thugs. I like that.
Theta Thugs.
I like that.
All right, take it away. Take it away, sir.
All right, ladies and gentlemen. So, Theta, right? What is this word? This mysterious word that maybe you've heard talk about, and maybe you're like, what the heck is Theta? So, we're going to talk about Theta. Specifically, I want to talk about something I call Theta Burn, how to use it to improve your options win rate. So, before we, as we close up the trading day here, it's 3:42. I want to give you a free trade first. This is a credit spread on Palantir. Write this down. Actually, I can probably drop it in the chat for everyone here, and let me just copy and paste it from my Slack.
And is that this week's expiration or next week?
Oh yes, I'm gonna drop the deal.
Oh,
Did
cool.
not put the expiration date in this slide deck, but I did in the profit panel. Where's my? Here it is. Here you go, folks. So I'm in this trade myself. I got filled at 25. So some people got filled at 26. I don't know where it is now. This is a credit spread, though. I'm going to be talking about the concepts behind a credit spread, because theta does tie into credit spreads and how they function. So that's the details in the chat. Again, 25 cents. I got filled for it. Might be a little. Maybe you get better fill, right? If you can get 27, 26, that's better. Maybe you get 24. That's still okay. This expires on Friday, so hopefully you don't have to do anything else, right? You don't even have to close it out if we're far enough away from that short strike at 177.5. But let's understand. So I want to get that out to everyone without context, because I want you guys to be able to open it. You lads and ladies, be able to open it before market closes. Now, though, everybody can see this black screen. What is theta, right? So you've heard maybe theta. What is theta? Theta is basically time decay in options pricing. It represents how much value an option loses per day as expiration approaches, right? Now, there's other factors that we're just going to talk about if theta was in isolation, because there's other factors that influence this. Of course, there's lots of Greeks. We're just going to focus on theta today, okay, as a conceptual framework. Every time you take an option trade, though, it loses money, right? Whether you sell an option, right, whether you buy an option, that option is losing value as you get closer to the expiration date. This is expressed as a negative number for option buyers, right? As an option buyer, when you buy an option, that value, the price of the option is actually decaying the minute you open it. Now, it's positive for sellers, because when you sell an option, theta will actually work in your favor, because you want the option to lose value. That's why in credit spreads, you sell at 1, you exit at 20 cents. You sell at $1, you exit at 20 cents. You're looking pretty good. Now, on the options chart, like you see here, if you go, this is on Thinkorswim, you basically go up to the little drop-down menu. You can select the view you want to see. You can make a custom view. This is just the standard one that comes with it. You can see all these different Greeks. We're not going to worry about delta or gamma or vega or rho or beta. We're going to look at theta. This is the theta column right here. You see that? So how to interpret this, right? How to interpret this giant batch of numbers? Well, a theta of negative 0.05 means the option loses $5 per contract per day. So you can see here, I forget what ticker this was, but on the 10th of October, if this contract, basically, if you say you got bought at 350 every day until expiration, that contract would automatically lose $5 per day. So if you bought it and nothing else changed, guess what? You would lose money to the tune of $5 per contract per day. Now, why does theta matter? Well, you can probably guess. Like I mentioned, they're wasting assets. Every option loses value as time passes, and sellers, the writers, benefit from this decay, whereas buyers do not benefit. They actually lose out from this decay. Now, how theta influences price, how different priced options are influenced by theta. So when you look at an options chart like this, let's look at SLV. This is from Option Strat. If you don't use this platform, I really like this. I've been trading for many years at this point, and I cannot understand a Thinkorswim options profit loss diagram. I hate it. This one's really good though. This one shows you this is the theta view mode, but you can see price of the option. You can see all the different Greeks. They had green, red, when you're in profit, when you're in loss, all this jazz. So optionstrat.com. I think you can get a basic for free, or it's pretty cheap, but it really does help you visualize options. And I recommend if you are a frequent options trader, you invest in something like this, because it's really going to help you put your whole profit loss pathway in a really easy to read visual format. So now there's basically 3 different types of options. There's at the money, in the money, and out of the money, right? At the money, if you look at this, I took this yesterday. Silver was trading at $42. You can see here that the theta decay, right? Right here, at the money option, which would be 42, 43 is about the same, 42, 43. The theta decay is really fast. So basically this option is losing $1.96 by the end of the 30th. It's going to have lost $2 by the end of today, $2.06. You can see that it loses value really fast and quickly. Why is that? Why do at the money options decay so quickly, have theta decay, such a high burn rate of theta? Because at the money options, like their name implies, have strike prices at or very near the underlying asset's current price. So this means since at the money options are so close to being in the money, the probability of them becoming profitable or remaining unprofitable can change quickly, right? Because stocks are going to move, right? They're probably going to move from the current at the money price. And if you have questions, let me know in the chat. Happy to answer them as we go through this and afterwards as well. So
there was one question if you want it.
I was just kidding. Okay, no, go ahead. What was the question?
The question was, will it go, because you were talking about buying the option and it losing money right away. The question was, will it do that even if the underlying is going in the right direction?
Yes. Yeah. That's why calls and puts are so hard. That's why buying regular calls and puts are so hard, because that option, no matter what the price does, is going to lose value. Now, if you buy an option and you want the stock to go up, you buy a call option. The idea is that basically the value of that option, because of the price action on the underlying stock, moves fast enough to overcome that theta decay. Does that make sense?
That's why I was so shocked. Nate and I generally agree with you and trade with you the exact same way you're talking about right now. We hate paying for premium. We hate that decay that goes against us. That's why I was so shocked with your trade tracker that is buying calls and puts, and it's at 83% win rate. But generally, like, we avoid it completely. We definitely are in line with what you're talking about.
Yeah, it's a really hard game, right? Because and that's why I like that scanner, and that's why that scanner and then that like trading regime, using it the way I use it, is the only time I trade regular calls and regular puts, because I know based on what we're going to be talking about it as the next couple of weeks, but because of the nature of the signals that scanner picks up on, I know that those moves are going to come faster and overcome that theta burn. But yeah, it's tough. It's a tough game. So uncertainty contributors are higher premium, and consequently they're faster time burn, they're faster theta decay, they're faster time decay. At the money options, extrinsic value, intrinsic value, that's a whole nother topic that we can talk about down the road. But at the money options have the most time value, right? They have the most extrinsic value and the least or no intrinsic value. Now, if you've been trading options, you probably know which options have the most intrinsic value, right? And if you don't, I'll tell you in a second. But time value is the portions of the options premium that's subject to theta decay, and at the money options have the most basically vulnerable. They're the most vulnerable type of options to time decay. Now, this is not a time decay. Theta is not a. It's not like a consistent decay rate. So if you buy a leap a year from now, in the next week, you will basically have zero theta decay, right? If you buy what's today, the October 1st, 2026 dollar calls, nothing's going to happen for a week, for 2 weeks, really even for a month or 2 months. But you start getting to September 2026, right? A month before that option expires, theta the rate of decay is going to increase. I'll show you what it looks like in a second. But the closer you get to that expiration date, the faster theta decay starts. It's like a logarithmic sell-off, right? As we get closer to expiration. And then at the money options with their higher initial extrinsic value, they do experience this decay more intensely in the final weeks before expiration. Now, if you look at this chart, so if we were looking at the money options, we have two other sides of the option. So let's look at this. We're back to silver. Silver's trading at $42, right? Now, what would an out of the money option be, right? It would be 45, 46, 47, 48, 50, 55, right? These are out of the money options. Now, what do you notice up here? 0.589, 0.581, 0.572. The decay is way steadier, right? They're still decaying, and they do still decay, but you don't see this acceleration like you see on the at the money options, right? Out of the money options lose value more steadily until expiration date. So you're not going to have that. You're not going to have as fast of theta decay. Now, in the money options, on the other hand, they have intrinsic value. This is what I'm talking about, intrinsic value. These have the most intrinsic value because if silver's trading at $42 and you're buying an option, a call option at 37, that has a lot of intrinsic value because it is already where the price is, right? Their extrinsic value, on the other hand, is lower than at the money option. So intrinsic value is higher, extrinsic value is lower than at the money options. And this also results in a slower decay rate. You can see this here that, I mean, if you go on basically the same to 55, look at that decay is nice and steady, right? It doesn't accelerate quite as much or nearly as much as the at the money decay rate. You go to intrinsic, in the money options with the high intrinsic value, the decay rate is actually, it starts at a much lower value anyways. And then it's basically zero as you get closer to expiration, because if we're on the morning of November 21st, which would be this contract's expiration, and silver is still trading at $42, the chances of it going to 29 in the next 6 hours is virtually zero. So that option is not going to really lose much value in terms of theta anymore, right? Out of the money options, on the other hand, have very little, or depending on how far you go out of the money, no intrinsic value. So intrinsic value is a measure of basically the moneyness of the option. High moneyness of the option for like a deep in the money call, going to have a lot of intrinsic value. Out of the money will have, out of moneyness, very little moneyness, right? So it's like far away. 55 is far away from the current price. It's not going to have any intrinsic value. It's far, far away, and the likelihood is a lot smaller that silver will hit that amount by expiration. That's what I just said. But as a result of this, they both decay at a slower rate, right? And this is the sort of what's this called, a hockey stick diagram, logarithmic diagram, whatever term you want, or is the proper one for it. This is a time decay graph that you can see, right? So this is what I'm talking about. As we get closer to expiration, so it starts out, let's say 120 days. So 4 months, right? Time decay is happening, but it's slow. Time decay speeds up about 90 days, a month later. A month later, it's going to speed up even more. The rate of change of that theta decay is going to get more and more. Now, in the last 30 days, on a 4-month outdated option, that's when theta is going to kick into high gear. And by the end of that, in the last week, I mean, you're just basically selling off theta as fast as they can, right? Now, understanding that chart, looking at the chart again, what factors affect theta burn, right? Well, time to expiration, right? If it's shorter time to expiration, that means you get faster decay. Implied volatility also does have an effect on theta burn. Higher IV slows decay. Options are more expensive though, so it's a trade-off. And again, strike price proximity, at the money calls or puts are going to have the most theta burn. They're going to sell off the most, right? And now there's different ways to think about theta. as a seller and as a buyer, because you're probably going to be doing both if you stay around the options market enough. And if you're taking multi-leg spreads, like I know Graham and Nate love debit spreads, theta matters for debit spreads and it matters for credit spreads. So you're going to be selling an option on either of those scenarios, right? A credit spread is just the reverse of a debit spread. And it's the same risk reward profile. It depends if you get the money up front or if you get the money at the end of expiration. So how to trade theta as a seller? Well, you want to sell premium when decay is most aggressive. So it's helpful to, if you really want to grab some good income as a seller, it's better to take shorter term options. Now, I'm not saying take dailies. It depends on your strategy, but you could take weeklies, you can take monthlies. But the idea is that you want to sell when theta decay will kick in rapidly to give you a quicker shot at getting profits, right? Now you can do that with credit spreads, iron condors, naked puts, calls, which, are riskier. They're more for advanced traders, and covered calls. All those involve selling premium, right? And when you do that, you basically profit if the stock stays within the expected range. So for instance, let's look at this Apple trade. Let's say we wanted to go on the November 21st. This was taken yesterday. So Apple was trading at 253.40 cents. November 21st, right? We wanted to do a 250 credit spread, which we probably would have wanted to actually do 250 to 245 or so. But this, you can see it work anyways. It doesn't really matter because this is going to be what you're looking at from option strat. It's going to be the same basic payoff diagram as if we had taken different strikes. But you can see that basically on this chart, right? This would be a bear call spread. So we want Apple to, this is a bear call spread. So these strikes are right. We want Apple to stay below 250 buckaroos before expiration, right? And basically our break even would be 252. We want to stay below that amount, 252.75. Now, if Apple doesn't move at all, so by November 21st, right, Apple's at 253. We open this position. Let's say we opened it yesterday. Apple would not have to move at all, right? Let's just say something happened. There was a month-long glitch in the markets. The government shut down. Let's say the market shut down. Nothing happened with Apple, but somehow we could still buy an options contract, but nobody could trade Apple. Nobody could touch Apple. That's the closing bell. And nobody could do anything with Apple they wanted to. Apple, as a result, didn't move in price at all. Look at this. If Apple does not move at all, because we sold a credit spread, right? Because we are basically in this situation, this scenario, we're option sellers. That means what? Theta's working to our advantage. So if Apple doesn't move at all, simply because theta decay occurs, look at that. We go from 7.4% profit, 7.7 to 8, to 8.4 to 8.8. You go all the way over here. Now you're at 12. You come closer to November 21st. You're at 18% by expiration without basically any price movement on Apple. It stayed at 253.40 on the dot. Simply because of theta burn, you would make 64% return on that spread. Pretty cool, right? That's if you're a seller, though. If you're a buyer, again, be aware you're fighting theta every time you open a position. Like I mentioned, leaps don't get as affected by them until it gets closer. You're not going to get the daily decay with leaps until like the last little bit of the contract. But this is where my scanner comes in, and this is why we can trade regular calls and puts with my scanner, because I always expect when I see a stock show up on that and I send out an alert that we're getting a fast and strong move, which when the fast and strong moves happen, that overcomes any theta burn that might eat away at our options contract. Now, if you do want to use theta burn, how can you apply this to improve your win rate? How can you apply all this information to improve your win rate? One way is, like I mentioned, spreads, right? spreads will benefit. Both debit and credit spreads do benefit from theta burn. When you buy a debit spread, if it's above your break even, just like if we go back here, when I said basically if the stock stays below our break even on this credit spread, because of theta, our actual trade will increase in value, right? Will become more profitable as theta burn, as theta decay occurs, right? Simply by doing nothing, not accounting for any move in the underlying stock. The same is true for a debit spread. A debit spread, though, is just the opposite, right, of a credit spread. So if it stays above your break even, you would see this exact same thing happen. If it's above your break even, you would steadily become more profitable on that spread as theta decay kicked into higher and higher gear as the option got closer to expiration. So, and if you are a buyer, again, you have to have some reason that the stock is going to go up. If you're just buying a regular call and put, again, you need to have some reason the stock is going to go up. Could be earnings, could be news, could be technical breakout patterns, but you need to have something that signals a strong move incoming, or else theta will crush you. You will get murdered in the markets. So now, have any other questions come up? Let me see.
I didn't see any other kind of beyond some of the basic ones that I think you ended up covering in there, but I did think that like the visual was really cool and kind of seeing it, especially at the money, the increase there. So if you can kind of find a trade that is, very close to the current price, but you feel confident it's going to end up finishing above that level, those are where you can get some of those really juicy credit spreads. Like,
Exactly.
You can even take it a step further and do what Graham does, like the wrap order, where you can get 100% ROI even on a trade that almost moves nowhere. And that's because of what you showed, that you're getting so much time decay value, even with very little movement happening in the stock itself. And I never actually seen the visual explanation of that. I thought that was really cool. Hopefully it was helpful to you guys. That actually is a pretty good explanation of why the wrap order is almost like an unfair advantage, because you get all that super strong time decay that you're taking advantage of, as long as it just has a very, very small move to accent that above what we would call like the line in the sand, like where that sell strike on the debit spread is, or where the buy strike on a credit spread is. So I thought that was super cool. I know that you also do this on a couple, actual setups as well.
Yeah, well, let me just go. So that Palantir trade, just to bring it all back home to that free trade. Now, this is a weekly contract we took. So, right. So I said, when you sell, you want to sell closer to the expiration date, because that's when theta is going to kick in. If you remember that hockey stick diagram, right? That's at the end of every expiration cycle. So on a weekly, the theta decay is really going to kick in Thursday afternoon. That's when it's going to start really selling off. So for instance, on this spread we took on Palantir that I dropped in at the beginning, we just need it to stay over the short strike, which is 177.50 by Friday. And that's why there's no profit target. Someone asked for a profit target on this spread. I want to collect the full $25 per contract on this spread. And to do that, I just need it to stay above the 177.50 mark, right? The short strike we sold, because we opened it on Wednesday. By tomorrow afternoon, theta is going to start kicking into high gear. So if it goes up, if it just stays here, if it goes up, that's great. That means we're probably going to have we're going to be able to not really worry about it, because it's going to get farther and farther away from the options we sold. And the chances of it coming back down are really low, or lower than it would be. But even if it stays here, right, because of theta, even though it doesn't move from 184.90, we're still going to be able to collect some dinero. And hey, even if Palantir finishes here by Friday at 4:15 p.m. at 180, even if it finishes at 170.50, 179.50, 178.93, because of theta, because we said, when Nate said that line in the sand, we still collect 100% of the premium we sold, right? Which in this case would be about $25 per contract. So
I love it. It's a really nice kind of demonstration of, a lot of the stuff that Graham and I do in practice. So I guess let me give you a nice layup here into how you trade, which is okay. Well, how do we? Great. Now we understand there's a nice advantage here if you use theta instead of fighting it. Okay, great. How do we find the right stocks to do it at the right time to take the maximum advantage of this? Because I know that's kind of what you do in one of your flagship services. So I'll give you a nice layup into that, because that's one of the reasons too that we wanted to bring you on, is actually talk about the actual trading strategy side of it as well.
Yeah. So let me stop sharing here so we don't have screenception going on. Yeah. So I use theta every week actually to basically, and you can use this concept to turn any company you want to into something I call a weekly dividend payer. Some companies pay dividends, right? But guess what? They're all quarterly, right? Microsoft and Philip Morris, they pay quarterly dividends, right? But using theta burn, the concept of theta burn, you can turn basically any company that's publicly traded that has options into a weekly dividend payer if things go right. So, before we start, what you're going to see, the profits and performance shown are not typical to any one individual. We develop tools and strategies to the best of our ability. I cannot guarantee the future, though, unfortunately. There's always a risk of loss when trading. Past performance is not indicative of future results. So every trade targets roughly $1,000 in income based on a $3,500 risk, and every example is based on that same risk unless otherwise stated. Been trading this for a long time, since April 2023, right? So about 2.5 years. The win rate on live published trade alerts has been 86%. And the average return is 35% over about a 3-day hold time, including the winners and losers. I can't guarantee specific future results because there is always a high degree of risk involved in trading. If you do want to learn more, though, see our terms on the WealthPin homepage for más información. And let's be real, in trading, there's going to be losers. There's no black box miracle system that prints out winning trades automatically, no crystal ball. The whole purpose of my research and work with traders is to help give them an edge in the markets. If you can't handle a losing trade, you really should not be trading with real money. Loss in trading have occurred and will occur in the future. My name is Alex. If you're just logging in, welcome. I want to show you how I took one of the biggest stocks in the market, and using what I'm showing you today, right? How I took one of the biggest stocks in the market and turned it into a weekly dividend piggy bank without even owning shares in it. So, forget waiting 3 months or even 1 month to collect your dividends. As long as we enter one special type of trade at the start of each week, we have a shot at collecting a cash weekly dividend by Friday afternoon, and every Friday after that for the entire year, which is exactly what happened the week of August 18th. Anyone using this strategy could have opened a trade at the start of the week and enjoyed one of the last sunny weeks of summer. And by 4 p.m. Friday, they would have seen $1,000 weekly dividend automatically hit their account. And what about the week before that?